Good afternoon, everyone. On behalf of Softlogic Stockbrokers, I would like to warmly welcome all of you for our investor webinar today with ACL Cables. And today, to represent the company, we have with us Mr. Suren Madanayaka, the Managing Director of ACL Cables, as well as Mr. Mahesh Amarasiri, the Group CFO. A warm welcome to you, gentlemen, and thank you for taking the time and joining with us today. And yes, ACL. So all of us know ACL is the most sought brand of cables in Sri Lanka. And together with their sister company, Kalani Cables, the group holds a combined market share of over 60% in the domestic cable industry. So they are the market leaders. To give a bit more insights on ACL. So basically the group mainly caters to the domestic construction segment, and given the challenges faced with certain receivables and things like that over the recent past, what we've learned is the company has sort of cut down their cable supply to Ceylon Electricity Board over the recent past, which now only accounts for about 10 to 12% of their top line, which otherwise had been a bit more over the previous quarters. Another interesting fact that I want to bring about over here is the fact that the company is at the moment aggressively trying to enhance their export revenue. So export sales is one lucrative business that any company would try to capitalize on. So basically, export sales, which accounts to about 15 to 20%, is now doing fairly okay at the moment for ACL. And what we've learned is companies trying to expand more on their exports. So another interesting thing that we want to find out today is that we've seen our country currently having many issues. We all of us are aware that Sri Lanka is currently grappling with one of its worst economic crises since independence. So if you look at our inflation numbers, the CCPI inflation has skyrocketed and it has bypassed 64% levels as of end of August. And if you look at our GDP numbers, yes, the GDP for second quarter 2022 contracted by about 8.4%. And one of the key contributors, construction, which contributed about 8.7% to GDP over the first half of 2022, has seen a contraction of close to 9%, which is a bit worrying for this sector. And also we are in the midst of a big forex crunch, and there's some shortages in essential commodities, and we are in the midst of import restrictions. Yes, whatnot. We are in the middle of many troubles. But however, despite all these things, we've seen ACL actually outperforming a lot. So they've been instrumental over the past few quarters. They managed to maintain their profitability intact. So if you look at their first quarter 2023 or the June ending quarter, they recorded a profit of 2.8 billion, which is very impressive. So I know it'll be very interesting for all of us to know how the company managed to sort of maintain their profitabilities over the past quarters, and also how the things are going to be, or the strategy is going to be, in order to sustain these profitability levels over the future quarters. So what we would do today is we would be initially having a panel discussion with our two eminent panelists on the company performance as well as the future outlook. And then it'll be followed by a Q&A session. So we would appreciate if all of your questions could be taken up at the end, and request you to post your questions via the Zoom chat box. Okay, so without delaying further, let me straight away move on to our discussion. And I would like to pose my first question to Mr. Madanayaka. So Mr. Madanayaka, as I've mentioned, we all know that Sri Lanka is having a tough time. At present, we are struggling with many issues. So, despite all these things, if you could tell our audience, how did ACL manage to weather the storm far better than the lot? What exactly drove ACL's profitability over the past quarters? Was it a volume-driven growth, or basically was it a price increase-driven growth? If you could insights on these aspects, it would be really great to start off the session. So yes, over to you, Mr.
First of all, thank you very much for having us today. And your question is very pertinent at this moment, because we did see quite a lot of improvements that happened with the current situation being so difficult for us. We did go through a few changes that we saw earlier on within the downturn that has taken place. One, we broadly went through three areas. One is the pricing strategy. Earlier, we didn't see such drastic depreciation or price increases that came about. So we used to absorb most of the costs that were there. From early this year, we decided that we will not be able to absorb most of the cost, and we had to pass that on to the consumer, unfortunately. So that was one strategy that we followed. Second was rapid depreciation that were taking place. Earlier, we did most of our procurements on usance. That's buying on supplier credit. With the current trends, we decided to go on site LCs. So that way we didn't have to go into any forex losses. The third one was basically the credit policy was another thing that we went through. Most of our customers were given large credit facilities earlier. But looking at the current situation, how the payment, the possibilities of payment defaults coming into play, we decided to go on a cash-only basis. So and also on secured credit. So I think those three factors were the main reasons for the better performance with lower top line these 3 quarters at least.
Thank you, Mr. Madanayaka. Just want to ask you again. What were the aspects that the company focused over past quarters to sort of optimize costs? And we saw a good margin improvement also. So basically, if you could sort of give us some insights as to what sort of cost optimize strategies the company sort of took over the past few quarters, that would be really great.
Well, cost side, we did look into a lot of optimizing that we had to do. One was the using of the possibility of us importing raw materials. It became very difficult. So we have to optimize on our usage of raw materials to a large extent. We looked at some areas, for instance, the CEB, some of the orders that we had got, we had to go in for force merger there. Then some of the low margin products that we had to maybe forego some of them. And concentrate on supplying our traditional markets as much as possible with the limited resources that we had. In the energy side, we have optimized using basically cutting down on some of the high energy consuming areas for the using the low tariff hours to do our manufacturing, that's nighttime manufacturing and so on. So also when it came to packaging, we optimized on that as well. We decided to look at wherever it might be a small cost-cutting operation, but we did. But none of this affected our quality. Actually, we did not compromise anything on our quality doing all this.
Okay, thank you. I have a bit of a follow-up question for you, Mr. Amrisri, on what we spoke about margins. So we know the currency has been depreciating at a rate from, if you look at this year from March to now onwards, we've seen the currency actually coming down a bit fast against the dollar. So with this challenge, how did this impact the margins? Because despite the LKR depreciation against USD, so we heard from Mr. Madanayake about different optimization strategies on costs that the company has been maintaining. But if you could specifically say, how did depreciation impact the overall performance over the past quarters? And what are your thoughts? Are these margins sustainable? Because these first quarter margins was quite instrumental. So what are your thoughts? Are these sustainable over the future quarters as well?
Right. Well, so when you look at it compared to the previous year, so you see this big shift in the previous quarter versus the same quarter the previous year. This is also coming from a lower base to a certain extent. And something also that we have done during the first quarter towards the end of the previous quarter as well is that when we see the currency started depreciating, we have also started increasing our prices proactively so that we did not have a substantial margin hit. So that is one area. And also, as MD mentioned, we also started looking at optimization of the raw material usage. So those three factors together has been contributed to a higher level of contribution margin, but also at the same time, we should be able to maintain the same level of contribution margin for the next few quarters as well. And given the current pricing level, current pricing that we are doing right now.
Okay, understandable. So the pricing mechanism has sort of done the magic to sustain the margins, and we could expect the similar scenario for the coming quarters as well. Wanted to ask Mr. Madanayake about the whole slowdown in the domestic home builders market, because we all know construction sector has sort of contracted over the past quarter by about 9%, and with ACL catering mostly to the local domestic market. What is the main growth driver at the moment for ACL? Seeing a slowdown in the domestic home builders market. So with all that, what do you think? What will drive the company's profitability next few quarters?
I think it's very pertinent that we have seen a huge reduction in July. We saw with the fuel crisis, we saw a huge reduction in sales that month. But I think things have bounced back from what it was at that time, and we're seeing most of the construction sites that stopped for work in July, August have more or less come back. Quite a few of them have come back into operation now. The housing market has definitely seen a reduction due to the fact that the interest rates are these current interest rates are certainly hitting the consumers. One thing that we will see is CEB with the new tariff increases there, they will be cash flow positive most probably. And with that, we will be able to start our CEB activities again. So that's one area that I see as going to be positive in the coming months. One other thing is the export market. We have definitely looked at exports more than the previous times. One thing is to see that we do our little bit to help the country come out of this situation. And so that's something that we feel that's our responsibility as well. Even though the margins are lower and competitive, it's very competitive, the export market, we are looking at new areas to go into, and we have been successful in the recent past in getting new customers as well.
Thank you, Mr. Madanayake, for that detailed explanation. So I would like to go on to Mr. Ambarsiri. Just want to ask you, we saw ACL's top line growing significantly. So yes, one reason could be the lower base that we are comparing with over the comparative quarters. But apart from that, would like to get your insights on what product categories performed extremely well over these past few quarters, or were there any new product additions or diversifications in your product portfolio that ACL has done over the recent past? If you could give some insights on those lines, Mr. Ambarsiri.
Yeah, as you correctly mentioned, the growth we observed in the first in the previous quarter is coming from a lower base, so that's why you see a substantial jump compared to the previous quarter. If you look at the revenue mix, we are about 90 to 95% on cables, and the rest of the products are mainly switches and the related trading components. We have not done any product diversification as such in the recent past, just that we have relooked at it, our products, and we have trying to optimize our product basket, where we have given the priority to high margin products, given the raw material constraint that we had. But apart from that, there's no significant change in the product mix as well as the product diversification side.
Thank you so much. So another question I want to touch base on is, Mr. Ambarsiri, about the inventory building. What we've seen for ACL over the recent quarters is that there has been some inventory building, and if you look at the last quarter, the inventory levels have sort of exceeded about 10 billion levels, I think. So what exactly, is there any particular reason for this inventory building? And also want to ask you, now we've seen the global commodity prices sort of, following this downward trend, given the whole recessionary fears in the global arena. So what are your thoughts? You think inventory holding cost is sort of justifiable at current levels, or your explanation would be a bit, it would be interesting to know for our audience, Mr. Ambarsiri.
If you look at our group, as you correctly mentioned, our group inventory is somewhere around 10 billion, and ACL accounts about half of that, slightly below 5 billion. If you look at it from the inventory building point of view, in a situation like this, it's better to have the inventory, because bringing down raw material is a challenge, given the USD constraints that the current country is going through, as well as certain import restrictions. So it will enable us to supply, to a certain extent. We can secure at least 3 to 4 months sales with the inventory that we are maintaining. So in that sense, it is justifiable. And from the working capital point of view, you got to finance this inventory. Another thing that we have done is that we have converted most of our sales into cash. So the inventory is more or less getting funded by our internally generated cash. So given the present scenario, building an inventory to a certain extent, if you can keep an inventory for about 3 to 4 months, which is desirable at the moment.
Okay, got it. Thank you, Mr. Ambarsiri, for that explanation.
Let me add something to that as well.
Sure, Mr. Madanayake.
Earlier, the raw material price going up also created a larger value in the inventory. So that's one other area that you could see, that the inventory pricing, at least inventory cost, compared to what it was the first quarter last year, that actually was much lower LME and the commodity prices are much lower. So in that sense, volume growth build up here is not as much as what it was at the first quarter of last year. So the pricing has come into play here as well.
Okay, got it, Mr. Madhanayaka. Thank you. And my next question is anyway to you, Mr. Madhanayaka. So this is about export sales. I know we touched based on export sales a bit before, but it's one interesting fact because we've seen ACLs, export sales, contributing more and more now to the top line than what we've seen over the past years. If you tell our audience, we know that ACL is focused and now expanding the footprint in their export businesses. What are the main aspects or the strategies that you all are using to expand your export earnings in the coming quarters? And also, if you could give some color on what export markets ACL is presently present in, and also what makes ACL one good competitive brand in those regions. That would be really interesting for our audience to know, because everybody is very much interested to know how or what the strategy behind ACL's export sales growth. So with you, Madhanayaka.
Thank you for asking that question. I think when you talk about exports, let me go back a bit on what markets that we've put. We serve from, our markets vary from Australia, New Zealand to East Africa, regional countries like Maldives, Bangladesh, India, and then also to Europe. Europe we do to some companies in Sweden, as well as regular supplies to UK. And so many other countries that we supply. The main reason that we have been able to be competitive, or even though our pricing might be slightly higher, the quality of our cables has been one of the main factors that we have been having repeat customers. And then also the reliability in supply. One thing that we have been seeing is that if we take an order, we do supply within that time period that we have said. So in that sense, we have been taken as a reliable supplier. And also with the volatile pricing that has been taking place these days, we have also sometimes had to go through price hits because of raw material movement. So in that sense, we have not had to reprice because we do absorb, and that way the customer trust is built up with our existing customers. One new area that we are looking at is taking part in more exhibitions so that we can get into new markets. And that's something that we will be doing in the near future, starting from next month. We also go through word of mouth, because some of the projects, we are the #1 supplier to Maldives in terms of cables. Most of the resorts use our cables, and word of mouth and the reliability of our cables is one of the reasons that we are #1 there as well. In Europe, in UK, we have been supplying this particular customer for over a decade now, and that shows that the confidence that we have built up. That's a little bit about our exports. And also, traditionally we've been doing about 15% of our turnover in exports, and last quarter I think we've been able to touch about 25, maybe just a bit over 25% in exports.
Yes, Mr. Madhanayaka. So that is why everybody's keen to know what ACL is doing differently in terms of expanding the export markets. And thank you so much for explaining our audience in depth about the strategies company is using at the moment. It was very helpful. And my next question is also for you, Mr. Madhanayaka. So we saw ACL doing a few acquisitions over the past few years. I mean, if you look at cable solutions, yes, in 2019, you all acquired a 51% stake of Cable Solutions. So, any plans on the way to acquire any new local or maybe a overseas cable company? Is there any plans like that in your pipeline? Mr. Madanai, can also one a small thing and also want to know about the future capex plans of the company. Yes, that's the question.
Thank you for that. We did the cable solutions acquisition that we did I think 2019 was definitely, it's coming into play now as we are using a lot of that for the group strategy, group synergies in going into the export market. As for acquisition of local cable manufacturing, we did acquire all the machinery of Kamal Cables last year. And that's been, we are basically expanded our capacity through that. And that will come into play most probably this within this financial year. Our capacity expansion here will see that. I think as for the local market, the group will definitely consolidate on the capacity that we have, and that will be able to, in the short term, make us have enough capacity to do the export sides as well. As for setting up operations outside, we have within the group, we have already started an operation in India. One reason for this was some of the OEM suppliers that we are, at least customers that we are having outside the country, were getting a bit jittery with the current situation in the country. And thereby we had to improve their comfort levels by setting up an operation elsewhere. So our first operation will come in India, actually. It will be a smaller operation, but I'm pretty sure there's going to be a lot of opportunity for us to grow there. And also with the cable solutions within our group, there is a lot more room that we can move outside.
Thank you. So thank you for that good news. So hope our audience heard that as well. And another aspect that all of us would like to know about ACL would be the distribution model. So I think Mr. Madanayaka would be the best to explain that aspect also. So just want to ask you, Mr. Madanayaka, if you could give some insights on the distribution model the company is following, as well as how the company is managing the dealer network to gain the optimum benefits. It would be really appreciated, Mr. Madanayaka.
Okay. Initially, the early 80s, we had a few dealers that we used to supply, and also we used a different company to do our distribution. And then thereafter, we saw the opportunity of us creating our own distribution network, and thereby we followed the Unilever model or Lever Brothers model as it was at that time. Here, what we do is we have distributors as stockists. They purchase some material and we help them to sell by our own representatives. So we have a clockwork distribution that, let's say, for instance, a customer A in Ampara is visited at 10 o'clock in the morning on Monday. We will see that happens every week. So the customers, our customers know that we will be there on clockwork, so that they don't have to carry absolutely unnecessary stocks are not necessary to be carried, and the reliability of supply is there. This certainly got affected with the fuel crisis. So we had to change some of our distribution strategies. We had to use order canvassing techniques, so that but our representatives always kept in touch with the dealers. Every single route was covered either by communication to them and order canvassing, and then the deliveries were done subsequently. So I would say, as for electrical, I would say our distribution is the most widespread. We do cover about 7,000 dealers island-wide on a weekly basis.
Okay, thank you so much, Mr. Madanayaka. Hope our audience the insight as well onto the model that ACL is following. Yes, so like to move on to Mr. Amar Siri now. So we all know that Sri Lanka is currently we've been having import restrictions from past 2 years or so. So even over the last month or so, a new set of restrictions were imposed. So, Mr. Amar Siri, how is ACL coping with these new import restrictions? And have you all encountered any sort of raw material shortages or difficulties in procuring raw materials or commodities for your production? If you could audience on those aspects.
We have been experiencing this almost a year now, mainly due to the fact that there is a forex shortage in the country. Apart from that, the recent restrictions, I mean, there's always been restrictions on the finished products, but given the fact that we are doing about 95 to 96% of our sales on cables and the switches, it didn't impact our top line substantially. Yes, we have been experiencing difficulties in opening LCs and things like that, but we have been able to manage it so far. Given the one comfort factor that we had was the inventory that we already with us, so that's something that we managed. And also, even though it takes a little time for us to open LCs and bring the raw material down, we were still being able to open those LCs and bring the raw material down. And also, to a certain extent, we were also able to source some of the raw materials locally. So we have increased our local purchases in the recent past. So with these three together, these factors together, we were able to manage the situation, and hopefully we'll be able to do that in the future as well.
Thank you, Mr. University. So now I think I'm moving over to the final couple of questions in our discussion. So would like to again turn to Mr. Madanayaka and like to direct these questions to you. So Mr. Madanayaka, we are aware now the country is currently having a big renewable energy drive at the moment. Just being curious, want to know what sort of an opportunity has this renewable energy drive created for our local cable suppliers, and in particular for ACL? What sort of a demand has this created, Mr. Madanayaka?
Actually, renewable energy is something that is most needed for our country, because as a single expense, fuel for power generation seems to be the largest component that's going out of the country. So renewable energy absolutely is, it has to be here. And out of that, solar seems to be the one that's on a drive right now. And we saw this coming into play, and we did quite a bit of groundwork to get ourselves certified. Now, our cables are VD certified. That's the highest certification possibility for solar cables, and we got our cables certified some time ago. So whoever the consultant would obviously approve certified cables. So in that sense, we do have a good opportunity to supply almost all the projects we have been supplying also in the past. And I see a large amount of opportunity coming up ahead for solar as well. Yes. every cable that's required for a solar power project can be supplied by ACL.
Yes, that's one good thing for our audience to know about. Actually, solar is one big need at the moment for need of the, I would say, for the country, because currently we are having a lot of power outages. So if we actually convert these sort of, more hydropower segments to solar, it'll actually save a lot for the country. Yes. So thank you, Mr. Madanayako. So my final question again to you. So, Mr. Malanaik, there should be a lot of challenges that you all have faced over the past quarters, and I'm pretty sure there would be more challenges ahead, and also there would be contingency plans ACL has put up for these challenges. So, if you could brief our audience, what sort of challenges the company has faced over the last few quarters, and what do you expect over the near term, and how well is ACL prepared to tackle these challenges in the near to medium term?
Well, I see there are so many challenges in this economic environment that we're going through right now. But I've more or less taken three areas as major challenges for us. One is the interest costs. Interest costs not only affects our cash flow situation, but also our customers. If you look at a few, maybe a couple of years ago or a year ago, we saw interest in single-digit levels, and then that actually prompted a lot of people to go in for new constructions, and new investments and so on. And that will definitely slow down. And also the second, I would say, is the raw material import restrictions that we are facing. With the limited dollars that we are having, it's going to be difficult for us to procure raw materials freely, like what we used to do. So we have to be, we'll have to have different strategies on procuring material. We did use some exporter funds earlier, and I think the restrictions came on that as well. But we are at the moment procuring quite a bit of material using different strategies, all legal for sure. And the third factor would be the energy factor. Right now, for instance, today's North power plant, one of the power generators going out of play would definitely have additional power cuts coming into play. Some of our production lines cannot be stopped because we use for insulation materials, thermosetting materials. Thermosetting in that sense that you cannot, it's not recyclable. So it becomes a difficult task for, if there is power outages, there's huge amounts of scrap generation. So, and then we have to use our generators to overcome the power outages at this moment. So with the fuel crisis, that's also creating quite a bit of constraints. So I would say these three areas are the main constraints that we are facing as a company.
Thank you, Mr. Madanayaka. I just want to add a small thing to that. How challenging is managing your competitors at the moment? Are there any sort of threat coming in from your competitors? Do you see any new openings coming out from your competition per se? What are your thoughts on those lines, Mr.?
One area that we see is that as all of us are going through the same, quite a lot of us are going through the same issues. But one advantage that we have is we've gone in for backward integration. Thereby, we can use quite a bit of the local material, refine it ourselves, and use. You bring it back to the virgin status. So that way, the group, we have some strategy is to go back into utilize our backward integration facilities that we have invested in the past.
Okay, so what we can gather is there would not be any sort of a major threat coming in from competition for ACL over the.
I would say,
yeah.
I would say it's minimum threats.
Threat at the moment. Thank you, Mr. Madanayaka. Okay, so my set of questions are over. Now, shall we move on to the questions in the chat box? Because I see a lot of questions coming in, and I think most of it you both have already addressed also in our discussion before. So let me take one question posted by one of our attendees. Wants to know about now, given the global commodity prices currently following this declining trend, is ACL also planning to give this advantage to the end consumer? Any, in simple terms, can we expect any sort of a price reduction? So probably,
certainly we could actually.
Madanai could take up the question. Yes.
Even though raw material prices have been coming down, the taxation here has been going up. We are going to be introduced with a new tax from 1st of October as well. And then VAT also has gone up from 8 to 15%. So that has actually affected, we could have gone in for some price revisions, but these taxes actually have added, have been negating those reductions that we could have given.
Okay, understood. So, Mr. Madanayaka, since you touched on taxes, I think it'll be interesting if you could explain about the tax structure of ACL, because we know from the interim budget per se, there were, apart from VAT, there weren't major changes that came across on the manufacturing sector. But if you could sort of explain to our audience what sort of a tax structure the company is following, I think that will be very interesting.
We fall into the manufacturing category, so our taxation is at 18%. Then the exports are 15%, and that's and the trading would be at 30%.
Okay.
ACL, yeah, and just to add to on the taxation, the SCL, the social contribution levy that comes into play on from 1st of October, which has a certain amount of cascading effect, given the fact that we are vertically integrated, so that when we have multiple layers, we have the pass-through effect on our pricing. So that's that is something that is accordingly impacting our pricing as well as the margins. The cascading effect of the particular tax.
Okay, understood. Thank you both. Moving on to another question that we have received on our chat box. One of our attendees wants to know, the total revenue, what sort of percentage contribution has Cable Solutions contributed for the past few quarters? Because from 2019 end, I think Cable Solutions was part of ACL. So if we can get some more color on what sort of contribution it has been giving to the company.
In terms of top line, it will be relatively small, and then also when we consolidate, it doesn't have a significant bearing on our top line or the bottom line.
Okay, got it, Mr. Madanayaka.
But I'm sure in the future it will have some lot of opportunity to go on.
Okay, so there should be more potential. So that's what we need to understand. Yeah. Okay. Thank you. So we have another question posted by Mr. Ravi Kumar Singha. So he wants to know, please explain the impact of the energy crisis on your plant operations and your strategies. So he wants to know what sort of impact ACL had given this whole energy crisis.
Okay, if you look at out of our cost, energy is not such a large component because we are dealing with metals. Metals are the highest component in our costs. Even though it's not such a large component of our costs, we do take that into consideration. As I told earlier, some of our high consuming equipment, we have realigned our shifts that we run those operations. So we have decided to run those during the off-peak hours to mitigate some of the cost increases that's coming with the current tariff revisions. And also, we are optimizing our energy usage, as I told earlier. So I would say those would be the factors. That anything that you can add there?
Yeah, we are also using alternative energy sources like solar. We have already commissioned 2 megawatt, and there's another amount of solar that needs to be added to the main grid. So that's also will help us to mitigate some of the energy cost escalations.
Okay, thank you both of you. And another question that has come up is our audience is being interested to know about ACL's future order book. So there are a lot of private sector. I mean, we know that ACL is part of many of the private sector projects. So if you could give some in-depth information on your future order book, I think that'll be interesting for our audience.
I think if you take the current orders in hand, we have significant orders in hand, also taking into the current cost structures, so that the ones that are flowing from the past is no more, where it will be all on the current margins that we have. The orders that are in hand will be all in the current margins that we are playing with. In that sense, I would say for the next 6 months, we should be okay. And what we see is in the pipeline also, there are pretty good orders that's been worked out.
Thank you, Mr. Madanayaka. And we have another question on about raw materials. So one of our attendees wants to know what percentage of raw materials are imported, as in what percentage of cost accounts for imported raw materials, as well as locally sourced. And we heard that you were mentioning that currently ACL is in the process of enhancing procurement of local raw materials, basically the scrap. So if you could give us some insights on what percentage is imported and the locally sourced contribute to, would be interesting.
See, ACL, we do have our own rod plants for copper and aluminum. We are the only ones with rod facility for aluminum. And then we also produce PVC. Most of these, we are able to refine copper and be able to use most of the scrap copper. What we get down as scrap, we refine it to the original state that we can use for electricity, at least for power transmission. Unlike most other industries, unless it's refined to a level that is, if you don't refine it to a proper level, it doesn't, you cannot use in the cable industry. So what I told earlier was we don't compromise on quality. So whatever we produce will exceed the existing standards at either SLS or the international standards that have been put in. We do use currently a large component. Still, exports would be majority actually in our raw material usage, the cost of raw materials.
Cost of raw materials. So imported raw materials would take the higher portion of your cost of sales. Okay.
Yes.
Thank you, Mr. Madanayaka. And one of our attendees wants to know about research. So research is part of ACL. So um, what are the new developments at research? If you could give some insights on that company also would be really great.
Yes, actually, research is performing very well, unfortunately, because of the CEB payment structure. We have not been, but there is a little bit of a cash flow issue there, where debt servicing and so on, even though we haven't gone in for default situation in any of our debts, we are to a certain extent constrained because of the payment pattern that CEB has been doing. We have got paid only up to September last year. So there's one whole year of collections still to be done. With the current tariff increases that CEB has gone through, I think these payments will be settled in time to come without much delay. As for the generation side, we did, after we invest there, we have gone in for gradual increase in generation. Now we have 7 hydros, 8 hydros and 3 sites where we are doing solar. So solar, we have 8 megawatts in solar right now that is generating, and we have we have another 25 in hand that we have to build. Also, for hydro, we have 14.5 megawatts currently generating. And this year, unlike the previous years, traditionally, July, August, September are very dry months for, well, August, September particularly are dry months for hydro. And this year was a relatively good year for that.
Yes, Mr. Madanayaka, very well explained. Thank you so much. So we have another question from one of our attendees, Mr. Pradeep De Silva. So he wants to know, would you like to get the first mover advantage to India, and want to know, would you like to position ACL in the Indian market, which is huge, if you can capture at least 1%? So how would you
I think even with our plans, the one that we are setting up, we are already getting some new customers in there. So I think we have built, they have heard of us, and in that sense, we are getting customers already. So this will not be the regular cables that we'll do. We'll do more value-added cables there, and also into harnessing as
well? Okay, thank you, Mr. Madanayaka. And since we've come to an end of our session, I would like my final question to both of you all. So Mr. Dinal Samarasinghe wants to know about ACL's dividend policy. So one interesting question which I kept till the end. So if we could get some clarity on what sort of a dividend policy the company is planning to follow, would be really great.
well, with the previous financial year was a very good year for ACL, and I think the dividend payout was not sufficient. We did go through that deliberately because of the fact that we had about 2.5 billion that we had to collect from CEB. So, and I didn't want there to be any cash flow issues looking at the future uncertainties and so on. But I feel our dividend policy will be maintained in time to come. And so bear with us on this dividend that we paid out, which I know it's not sufficient.
Thank you, Mr. Madanayaka, for openly addressing that concern and giving a very clear-cut answer to our attendees. Thank you so much. And I think we have addressed almost all the questions that we've received in our chat box. I think we've addressed most of them during our discussion as well, which brings us also to the end of our webinar today. Thank you once again, Mr. Suren Madanayaka and Mr. Mahesh Amarasiri, for joining with us today, taking your time and joining with us today. And also would like to thank our audience, a special thanks actually to our audience who had been very interactive throughout the session. Thank you very much for joining with us for our webinar today. And this brings an end to today's webinar brought by Softlogic Stockbrokers. So hope to meet all of you all once again.